Welcome to this edition of Ethical Sustainable Investment News and Analysis to Profit By. I'm Ron Robbins, an ethical investing pioneer for over 40 years, quoted in the Wall Street Journal, MarketWatch, the Globe and Mail, and numerous other media, and founder of the highly respected global ethical sustainable investing information website, Investing for the Soul. And please listen to my disclaimer statement at the end of this podcast. Now enjoy this podcast. Hello, I hope everyone enjoyed the holidays and sincerely wish you a happy, healthy and prosperous 2025. My name is Ron Robbins, and I hope this podcast won't be a little bit too croaky. My voice in the mornings often has that kind of character to it. Anyway, we'll plunge on and hope for the best. So I welcome you to my podcast, episode 145, published January 10th, 2025, titled Top 2025 ESG Stock and Fund Picks. It's presented by Investing for the Soul. Investingforthesoul.com is your site for vital global ethical and sustainable investing mentoring, news, commentary, information, and resources. Remember that you can find a full transcript and links to content, including stock symbols and bonus material, on this episode's podcast page located at investingforthesoul.com/podcasts. Also, a reminder, I do not evaluate any of the stocks or funds mentioned in these podcasts, and I don't receive any compensation from anyone covered in these podcasts. Furthermore, I will reveal any investments I have in the investments mentioned herein. Additionally, quotes about individual companies are brief. Please go to this podcast webpage for links to the articles and more company and stock information. Now, most ethical and sustainable investors have socially responsible investment funds. This is a good review article of the best ones for US residents. It's titled Best ESG ETFs, Top Funds for Socially Responsible Investing. It's by Brian Baker and found on MSN.com. Here is some of what he has to say. 1. A Vanguard ESG US Stock ETF tries to match the performance of the FTSE, that's FTSE, US All-Cap Choice Index and screens for certain ESG criteria. Certain companies in the following industries are excluded from the fund: adult entertainment, alcohol, fossil fuels, gambling, nuclear power, tobacco, and weapons. 5-year return annualized 15.7%, expense ratio 0.09%. 2. iShares Global Clean Energy ETF seeks to track the performance of an index of global stocks from the clean energy sector. 5-year return annualized 7.3%, expense ratio 0.41%. Number 3. iShares ESG MSCI USA Leaders ETF gives investors exposure to large and mid-cap stocks that score highly on ESG issues relative to their sector peers. 5-year return annualized 9.7%, expense ratio 0.49%. 4. iShares ESG Aware MSCI USA ETF tracks the results of an index of U.S. companies with ESG features that show a similar risk and return profile as the overall MSCI USA index. 5-year return annualized 15.7%. Expense ratio 0.15%. End quotes. This next article arises from some new original research. It's titled Top Stocks Widely Owned by Small Cap ESG Funds by Francis Afterhaidi and can be seen on Morningstar.com. Now a few quotes from the article. In the United States, small cap stocks range from a market cap of $2.9 billion to $11.2 billion, which would be the focus of this exercise. Learn more about Morningstar categories by downloading the U.S. Fund Category Methodology paper. And that's a link to that paper on the site. We compiled the holdings of the oldest share classes of all U.S. sustainable small cap funds. Next, we put the top 200 stocks that are commonly owned in a theoretical portfolio. Then we calculated what the average weight of each security would be if this portfolio held all 200 stocks. We did the same with traditional funds, defining the universe as the oldest share class of small cap funds, excluding sustainable funds. We found 5 stocks owned exclusively by small cap sustainable funds. 1. Aptar Group. Morningstar ESG Risk Rating Assessment, negligible. Total return year-to-date, month-end, 41.3. I presume that's percent. Price to fair value, 1.05. Moat, narrow. The company specializes in various drug dispensing solutions, including nasal spray inhalers and elastomer components for injectable drugs, high-end fragrance pumps, and food dispensing closures. We think the firm's outlook is strong from a longer-term perspective, says Jay Lee, Morningstar Senior Equity Analyst. The company's carbon footprint is affected by the nature of its operations and the source of energy used to power these operations. Morningstar Sustainalytics. 2. Wyndham Hotels and Resorts. Morningstar ESG Risk Rating Assessment, medium. Total return year-to-date, month-end, 23.52. Price to fair value, 1.05. Moat, narrow. We believe Wyndham's moat is illustrated by its enduring unit growth demand from third-party owners, guest satisfaction ranking of its brands, room and loyalty scale, and contract length of franchisee relationships. So says Dan Wasiolek, Morningstar Senior Equity Analyst. To maintain its ongoing operations, the company uses large quantities of water. Increasingly stringent carbon regulations and energy efficiency requirements could lead to higher energy prices, larger associated costs for the company, and compliance issues. So says Morningstar Sustainalytics. Number 3. Clearway Energy. Morningstar ESG Risk Rating Assessment, severe. Total return year-to-date, month-end, 12. Clearway Energy, Inc. is a publicly traded energy infrastructure investor with a focus on investments in clean energy and owner of modern, sustainable, and long-term contracted assets across North America. Although the company provides some ESG disclosure, its overall ESG reporting is not in accordance with leading reporting standards, so says Morningstar Sustainalytics. 4. Commerce Bank shares. Morningstar ESG risk rating assessment, medium. Total return year-to-date, month-end, 39.6. Moat, narrow. Commerce Bank Shares, Inc. is a $22 billion regional bank that provides a diversified line of financial services, including business and personal banking, wealth management, financial planning, and investments through its affiliated companies. The company's product and service portfolio, as well as its customer base, triggers exposure to quality and safety issues, so says Morningstar Sustainalytics. 5. Darling Ingredients. Morningstar ESG risk rating assessment, low. Total return year-to-date, month-end, minus 18.68. Darling Ingredients, Inc. develops and manufactures sustainable ingredients for customers in the pharmaceutical, food, pet food, fuel, and fertilizer industries. Growing consumer demand for healthier and more environmentally friendly foods, including low-fat and plant-based proteins, exposes Darling to potential customer loss should it fail to adapt its portfolio to this trend, so says Morningstar Sustainalytics. End quotes. This next article is written by an analyst we have repeatedly featured on this podcast. Her name is Aparita Dutta, and she hails from Zacks. The article is titled 3 Renewable Energy Stocks Poised for Explosive Growth in 2025. Here are some quotes by Ms. Dutta on each of her picks. These stocks, with a favorable Zacks ranked number 2 by, have gained more than 25% so far this year. These can be expected to continue their rally in 2025 as well. Number 1 is Constellation Energy. This company delivers electric power, natural gas, and energy management services across the United States. It is the lowest carbon emitter among major investor-owned U.S. generators. The Zacks consensus estimate for Constellation Energy's 2025 earnings implies a 10% improvement from the prior year's estimated earnings. The stock has gained 96.6% in the year-to-date period, while its price target has an upside of 23.7% from its last closing price. And see a free stock analyst report on this stock. 2. Accelerate Energy. Accelerate Energy provides floating liquefied natural gas (LNG) terminals. The Zacks consensus estimate for Accelerate Energy's 2025 earnings implies a 19.1% improvement from the prior year's estimated earnings, while that's for its 2025 sales reflects a 25.8% increase. The stock has gained 97.6% in the year-to-date period. Again, there's a free stock analyst report available by going to the podcast page and clicking on the free stock analyst report. 3. Gevo. Gevo is a renewable chemicals and advanced biofuels company engaged in the development of bio-based alternatives to petroleum-based products. The Zacks consensus estimate for Gevo's 2025 sales implies a 101.5% improvement from the prior year's estimated earnings. The stock has gained 30.1% in the year-to-date period, while its current average price target has an upside of 296% from its last closing price. Again, a free stock analyst report is available. End quotes. This next article features some well-known ESG stocks. It's titled 3 ESG Stocks That Align Profits with Purpose. It was written by Rajikumarai Saxena and was seen on stocknews.com. Here is some of what Ms. Saxena has to say in her article. 1. Salesforce Inc. provides customer relationship management technology that brings companies and customers together worldwide. Its service includes sales to store data, monitor leads and progress, forecast opportunities, gain insights through analytics and artificial intelligence, and deliver quotes, contracts, and invoices. Salesforce Inc.'s robust outlook is reflected in its Power ratings. That's POWR ratings. The stock has an overall rating of B, which translates to a buy in our proprietary rating system. 2. Adobe Inc. operates as a diversified software company globally. It operates in 3 segments: digital media, digital experience, and publishing and advertising. The company offers products, services, and solutions that enable individuals, teams, and enterprises to create, publish, and promote content, and Document Cloud, a unified cloud-based document services platform. Shares of Adobe have plunged 13.7% over the past month, to close the last trading session at $446.74. Adobe's power ratings reflect its sound fundamentals. The stock has an overall rating of A, which translates to a strong buy. 3. NextEra Energy Inc. generates, transmits, distributes, and sells electric power to retail and wholesale customers. It generates electricity through wind, solar, nuclear, natural gas, and other clean energy. NextEra Energy has raised its dividends for 29 consecutive years. Over the past year, the stock has gained 20.4% to close the last trading session at $72.49. NextEra Energy's power ratings reflect its bright prospects. End quotes. Now, infrastructure stocks are often overlooked by ethical and sustainable investors. However, they are worth looking at. See this article titled, Meet the High-Performing Infrastructure Stock That's Crucial to Supporting This Massive $3 Trillion Megatrend. It's by Matt DiLallo, found on Fool.com. Here are some quotes from the article. One company that is absolutely critical to building this infrastructure is Quanta Services. It's the industry leader in providing specialized infrastructure solutions. Quanta Services provides specialized infrastructure solutions to the utilities, renewable energy, technology, communications, pipeline, and energy industries. His client list is a who's who of industry leaders in these respective sectors. Increasing infrastructure investment is driving strong growth for Quanta Services this year. It delivered another quarter of double-digit growth in the third quarter. Its revenue rose from $5.6 billion to $6.5 billion, while its adjusted earnings increased from $2.24 per share to $2.72 per share. It also generated $539.5 million in cash flow, pushing its year-to-date total to nearly $1.4 billion, with almost $980 million in free cash. That strong performance has helped drive a more than 50% increase in its stock price this year." End quotes. Now some additional articles not covered due to time constraints, and there's quite a few. 1. Title: 4 alternative energy stocks to buy amid rising raw materials costs on barchart.com by Zacks Investment Research, Inc. 2. Title: Analyst sees 500% upside for this clean technology penny stock on finance.yahoo.com by Nauman Khan. 3. Title: Top 5 fastest growing solar energy stocks to watch out for in 2025 on equitymaster.com by Staff. 4. Title: The shocking rise in Enphase energy stock. What investors need to know on johnfruland.net by Paquita Cesaro. 5. Title: Why Aptiv plc is one of the best environmental stocks to invest in right now on msn.com by Mashed Ahmed. 6. Title: Why Array Technologies is among the best renewable energy stocks to buy on finance.yahoo.com by Mashed Ahmed. 7. Title: Nike, a top socially responsible dividend stock with 2.2% yield on nasdaq.com by BNK Invest. 8. Title: AAPL, 3 ESG stocks for ethical and profitable investing in 2025 on stocknews.com by Jigmurai Saxana. 9. Title: USCL, USCA, and NZUS, 3 climate ETFs beating the market on marketbeat.com, written by Nathan Reef and reviewed by Shannon Tokim. 10. Title: 3 renewable energy stocks to buy in 2025 and hold for decades on Fool.com by James Brumley. And now a couple of articles of interest from around the world. 1. From India, title: Top 5 fastest growing solar energy stocks to watch out for in 2025 on equitymaster.com by Staff. 2. Australia, title: Which 3 ethical ASX ETFs performed the best in 2024 on 4.com.au by Aaron Bell. So these are my top news stories with their stock and fund tips for this podcast, Top 2025 ESG Stock and Fund Picks. Please click the like and subscribe buttons wherever you download or listen to this podcast. That helps bring these podcasts to others like you. And please click the share buttons to share this podcast with your friends and family. Let's promote ethical and sustainable investing as a force for hope and prosperity in these troubled times. Contact me if you have any questions. Thank you for listening. I'll talk to you next January 24th. Bye for now. Learn how to create a simple portfolio reflecting your personal values by taking my 1-hour tutorial. Go to investingforthesoul.com/podcasts and click the link in the right-hand column for my DIY Ethical Sustainable Investing Pays tutorial. Now, I'll mention in the podcast if I have any direct interest or holdings in companies or securities I'm talking about. Furthermore, any news, opinions, analysis, or other information offered by myself, as well as references and information to or from other external sources in this podcast, is provided as general market information and should not be relied upon and thus does not constitute investment advice. Investors should consult their own licensed investment professional before making investments. Also, I will not accept liability for any loss or damage, including without limitation any loss of profit, which may arise directly or indirectly from use of or reliance on information in this podcast. Do contact me at ronr@investingforthesoul.com. Signing off, this is Ron Robbins.